Yeah, so guys, we're live now. Um, I would like to know where you're watching me from. So do let me know in the comment section. Do let me know in the comment section where you're watching me from. All right. Okay. Now, so today we'll be looking into some live trade opportunities in the market, and today we'll be looking into Australian dollar and the US dollar. All right. Great. I can see uh, Daimini from South Africa, Murphy from Abuja, okay, Joe Man from South Africa, Kelvin from Nigeria, Jonathan from Delta State, Nigeria. I can see Olasukomi from Nigeria as well, Lagos. Okay, I can see VJ from India. All right, I can see Ame from Pakistan. Nice to meet everyone. So today we'll be analyzing Australian USD. All right. And one important thing I want us to do is the application of a top-down approach. What has the market been doing in the past? What has the market been doing? What has the market done? What is the market doing? And what is the market going to do? All right. That is where the place of forecasting, comes in, where we need to apply the analysis, look into our price, and predict the future. All right. Good. So, you can see that this is the monthly time frame, and like I say, on the monthly time frame, each candles on this time frame was formed in 1 month. So if you look at it, each candle was formed in 1 month. So it took 30 to 31 days to form one candle on the monthly time frame. And from the bird eye view, we can see that Australian USD has been on a bearish momentum, okay, um from yeah from 2011, okay, up to 2022. They have been in a bearish momentum. Okay, now let's mark out areas of support and resistance. Okay, I've told you, if you want to map out areas of support and resistance and you want to see clearly where those areas are located, you can just easily move to the line chart. With the line chart, you can be able to identify those areas of support and resistance. Okay, I'll be able to identify those areas of support and resistance. Good. So now on the monthly time frame, we are able to identify areas of support and resistance, right? Looking into the fact that these are the things we expect to. These are the areas where price have actually created footprints. Okay, we've seen price footprints on all these levels. Okay, that is why they are very significant for us to consider them. Okay, so now let's take a brief flow of how price moved. All right, so the market started moving from here up to this level, was rejected, and it went down. It's was rejected here for several months, for 1, 2, 3, 4, 5, for almost 5 months. It was touching down this support level. The level resisted it, and then it moved up. Okay, came close to that previous resistance level. All right, and then went down a bit again, and finally broke through that resistance level. So you could see the bullish candle that came through to break out from it. And then what do we see? We see an upward push in price. Price came again to test that region that was broken through. That's to tell you that this level now rejected price from breaking down further. That is, our previous resistance level has now turned support level. So price went up, came down to touch the same level again, went up, price fluctuated a bit, came down and broke through this support level. All right, this resistance turned support level. It broke through it down, went up again to test it. That's like a retest. I've always said there are 80% chances of a retest, a pullback. All right, we call it retest or pullback. A pullback after a breakout. So that's what happened here. And then price, went up again and started falling. Okay, came to this level. This level was like a support level. Then price was pushed up. Okay, price tried to break through this level but was rejected severally, and then price went down. Okay, came down to that the initial support level that was created, that was created here. Can you see it? That was created here. Price came to still touch that level, but that level was still solid and price was rejected. Went up, came down a bit, and currently flowing at this support level. All right, this support level. So what did you see happen at this support level? There was a breakout from this support level. Okay, and we can now see a retest coming in from here. So the question now is, from here, are we going to see a bullish pump, okay, or a continuous bearish momentum? That is why we're here now. Okay, so we've done a run through of how price flowed. Okay, good. So let's take it down to the weekly time frame. Okay, the weekly time frame. Yeah. So good. Okay, now you look at where we are currently. Okay, this is where we are on the weekly time frame. All right, so if you string it together and you look through the price, you discover that this level coming. Okay, yeah, good. So you look at what price did in between this level. Okay, and this is one level we want to look into deeply. Good. So price had ranged in this between this level, and we can see what price is currently doing now. So, but from here, we cannot literally tell what direction price is most likely going to go through. All right, because there is no clear indication of price direction if it is going to go up or down. All right, so we'll go down into the lower time frame to be able to see, to be able to have a clearer view of what price is doing on the lower time frame, if there is any opportunity or if there is no opportunity. All right, so we go to the daily time frame. All right, so what do we have on the daily time frame? what do we have on the daily time frame? Good. So on the daily time frame, you look at what we have here. Let's draw a line. Okay. Good. So from this level, we can see that we have like a channel here where price has been moving up, coming down, moving up, creating higher highs, and lower lows. All right. So currently here now is what we want to see what price is currently doing. So definitely we know that this level, okay, is now a resistance. It's a support level turned resistance. Why? Because if you look closely, if you look closely, here, you will see that price actually broke out of this region, retested, and was rejected, and now it came back also to retest this region again. Now there are two things that can either happen: either it breaks back into this ranging triangle, or it continues a downward trend. Okay, good. Now yeah, someone is asking if we are going to analyze gold. Yes, we're going to analyze gold, but currently we are on the Australian USD. And interestingly, the Australian USD do correlate at some point with the gold market. All right, because Australia seems to be one of the largest, have the largest gold mine. Okay, so yeah, so their currency sometimes correlates with the movement of gold. So now we look into what is currently going on here. Now we have a channel where price is fluctuating, okay, and then we want to determine what direction price would go next or might go next. Now let's go to the lower time frame, the 4 hours time frame, which helps us to see what is happening in the past 4 hours. So each candle on the 4 hours time frame, all right, are formed in 4 hours. Now, so if you look at this closely, you will discover that currently market does not have a definite direction that we can easily say, okay, this is what would most likely happen. But there are two things that can happen here, okay, and which I'll be sharing with us. We can watch out for it, okay. Either price breaks through this region, all right, and continues the uptrend, or price comes to touch this region, okay, that is what would happen in between this place. But from what I'm seeing here, there is two things we would need to watch out for, okay, and these two things are quite simple. Coming. these two things are quite simple. So if you look at this candle here, you will discover that there was this bullish candle here. So where did you get, how would you conclude that price would continue to break down? Okay, if these candles break below this level, because you will see that this bullish candle came here, it was like an engulfing candle. It came and engulfed these previous candles and closed above them all, right? Now, if this candle here now comes and breaks through below this previous bullish engulfing candle, all right, then you will definitely expect the market to go down. Okay, but if the market comes and close above this bullish engulfing candle, the high that this bullish engulfing candle has created, then you expect a bullish momentum. Out of those two, that is what we should expect from what price will do at that region. All right, from what price will do at that region. If either price, is either price is bigger, if price closes above this bullish engulfing candle, then market would continue to go bullish, but if it closes below it, then definitely market goes bearish. All right, so this is the level we are looking at now. This is the level we are looking at. Okay, good. So if market breaks out of this level and closes above it, then there would be a further pump in price. But if market closes below this level, then there would be further pull, there will be further bearish momentum coming in to drag price lower. All right, good. So that's what we expect on this trade. So for persons who are looking to scalp the market, then you want to look at the 1 hour time frame. What you are concerned about now is the 1 hour time frame. Okay, you are looking at the 1 hour time frame to catch in on market opportunities. Okay, so not like you want to execute on the 1 hour time frame. Now you use the 1 hour time frame to look at what the momentum is like in the market. All right, so currently the momentum in this short 4 hours 1 hour chart, now they are momentarily going down. All right, so now you go to the 30-minute time frame to see what is also happening here. Okay, then you go to the 15-minute time frame. So you look at what is happening in the 15 minutes. So now you as a scalper, you want to enter and exit the market. Okay, this is for educational purpose only. So what does scalpers do? They want to lock in on profit. Okay, or so a scalper looks to take profit at this level or take profit at this level. All right, or even at this level. Do you get it now? So when he enters the market from here, okay, he can exit from here. And scalpers takes bigger risk because they are in for a short-term reward. Okay, they take bigger risk so as to chunk out a huge sum of reward out of the market. Okay, but definitely has its own risk. Okay, because scalping comes with its high risk trading strategy. So you can go further to the 15-minute time frame. I'm sorry, to the 5-minute time frame. Look at what price is doing in 5 minutes. So 15 minutes is saying that market is, there is a bullish candle, right? This is a bearish candle trying to, and then it seems like there's a buy pressure because of this wick that is currently being created, right? So scalpers might now look at it that, okay, if this wick closes here, all right, they will buy and exit here or here. Okay, so that is how scalping works. Some scalpers use 1 minute. So for them, for if you have looked at 15 minutes and see that 15 minutes looks like a bullish momentum coming in, then you now look at 1 minute, okay, to see what is happening. So you see that bullish momentum already coming in 1 minute time frame. Okay, on the 1 minute time frame, then scalpers buy here and exit here, or they buy here and exit here, okay, in few minutes, some in seconds, possibly when there is high volatility news. Okay, they come in, they exit almost immediately. So let's analyze the gold market now. The gold market, okay? Gold. Yeah. So here is the gold market. So we go to the monthly time frame. Let's see some interesting chart. So yeah, so gold can be traded even based on fundamentals, right? However, let's look at the technical review to what to the present state of gold. Good. So now let's mark out the levels of support and resistance. Let's take it down to line chart. Okay, let's mark out levels of support and resistance. Yeah. Okay. Good. So if you are going to look out for opportunities, right, you must be very observant of this level that is being printed here. Okay, which is the level we would be looking at, because in as much as past data are very important, okay, what is currently happening within that time frame is also very important. All right, while all these are important, this is also very, very important. Okay, so you can see how price flowed up, all right, and then there was a bearish momentum from 2012 down till 2019 when COVID, started, and then countries and this apex bank started giving stimulus, and there was now much money entering into the market. So you can see the flow, okay, and then it went up, and now we see that there's so much of quantitative tightening now coming in, where interest rates have been increased and a lot of macroeconomic impacts on the economy. There's also one thing that we would need to consider, that there's the inflation rate is also increasing day by day. Okay, now people are losing confidence in storing their money in assets, and now more interested in putting their money in safe havens. All right, and of course gold is one very unique safe haven that investors are very much concerned with. yeah, guys. So let's look at weekly time frame. Good. So on the weekly time frame, uh, okay, good. So we can see what is happening on the weekly time frame, where we have price, popping out here, entering into this bridging gap, came down, went up, came down, range there a bit, went up, came down, went up again, came down, and now look at what is happening. Okay, good. Now if we zoom closely, let's zoom closely. So I'm very much concerned about the last three candles here, the last three candles. Okay, the last three candles. Okay, good. So if you look at what is happening here now, weekly, on a weekly time frame, you discover that here we had so let me take off this stuff. Okay, good. So here now, price came down here, and you see what happened last week. Price, was there was a pushback of price here, and this week we are having price going above last week bullish momentum close. So this is giving us a signal that the bulls, okay, are preparing and are pushing up the market. Like I said, when there is inflation, gold becomes very attractive. Okay, so in terms of macroeconomic crisis, we will see gold, increasing in value, because it is one of the number one safe having assets in the world. Okay, so let's look at the daily time frame. The daily time frame. Good. Now this is the daily time frame. Look at what the daily time frame is telling us here. Okay, the daily time frame is confirming to us that gold is bullish. So you see that price that has been rallying at this level. Okay, at this level, don't forget we are looking at the daily time frame. All right, so price that has been rallying at this level, okay, has now broken out of that level and pushed price up. Now this is a good bullish signal for gold. A good bullish signal for gold. So I would expect that the bullish momentum will push up to this level, because this level here now is also a major resistance level. All right, so if we are going long on gold, all right, then we are looking to put our stop loss here and our take profits. We'll put our stop loss at 1707. All right, and we'll put our take profit at 1818. Okay, that's how we'll put our take profit. All right, good. So let's look at the 4 hours time frame. interesting. So look at it. That's why I said when we go deeper into lower time frames, we would see clearer. It tells, you know, a more clearer story. Okay, so you can see that price came into this ranging box and ranged for a while. No, finally broke out. Okay, and you see this. So this right here is a bullish momentum, an indication of a bullish momentum. All right. So we will be expecting price to push up a bit to this next support resistance level. All right. So we're expecting price to push up a bit. That is what we're expecting price to do. Okay. That is what we're expecting price to do. So if you look at the 1 hour time frame too, all right, so there's like a breakout of this ranging box. Okay, so after a breakout there will definitely be a pullback, a slight pullback. So once there's a little pullback here or here, we're expecting, you know, more upward movement on gold. So what would I do if I'm going to buy gold? If I'm not confident enough that this price I want to buy at this price, right? I would always set my buy order here. Okay, and when I'm setting my buy order here, I'm setting my stop loss at the next support level. If I'm setting my buy order here, I'm setting my stop loss at the next support level and my take profit at the next resistance level. Okay, that is it. All right, that is it. So we set our buy order here. When the market continues going up, it triggers the transaction. We buy and sell at the next resistance level. All right. So now I want to take few questions and then we answer the questions and we prepare for next week. Yeah, so if you have any question, please do well to ask now so we can, you know, analyze together based on gold and based on the analysis, the live trade analysis we are having now. All right, I'm waiting for questions. So on gold, this is bullish, right? We are bullish on gold. All right, we are bullish on gold. We are bullish on gold. Yeah, any questions coming in? Said, can I? Yeah, so if you are using your phone, you can always change your order type. You know, we have different type of order. We have buy order, we have, you know, limit order. All right, so you can always change your order type and set it to buy limit. You put in the price at which you want to buy. All right, and you set your stop loss and your take profit level. Yeah, so it can start now and it can start anytime. Okay, so what we are doing to prepare ourselves, not leaving money on the table, all right, is that we set a buy order. Once the market moves and enters into our buy order price, it triggers. Okay, so when it triggers, what happens? Our buy order is activated because we have only set a buy order instructing the broker to execute the trade when the price gets to a particular level. So you are in control of what level you enter into the market and what level you are not going to enter into the market. So from here, so not see, the question is this. It's quite obvious that we've been able to map out areas we need to watch, okay, so as to observe potential profit. Not all trades, not all price movement moves in trends, okay. Now, like someone said that, okay, I've not drawn any trend line, okay. However, how do we predict the market rightly? Okay, some markets are not a trendy market. Okay, so market, like in the previous one when I analyzed for Australian USD, we use the trend, all right, because we observe a downward trend. Okay, but for the gold market, when you look closely, the past few hours, days have been ranging. Let's go to the weekly time frame. Okay, can you see that it has been ranging? Price has just been ranging in between here. So where do you want to draw your trend line? Okay, price has been ranging. This is a resistance level, this is another resistance level, this is a support level, same support level. All right, so if price is ranging, you cannot just draw a trend line. All right, because the market is either uptrend, downtrend, or consolidating. Okay, so but what we can see here is that the market is consolidating. All right, the market is consolidating. That is what we can see here. So Yinka, I hope I've responded. All right, the market is consolidating. You don't draw, there's no trend, you can't draw a trend line on a consolidation, on a consolidating market. All right, on a ranging market, it's ranging inside this box that we have drawn. That's to show that it is ranging. Okay, good. The next person said, what do I do when I stumble into a trend that has already started, where I can no longer use a buy order? Good. So when you stumble into a trend that has already started, more like you are saying that you got into a market and you see that, oh, you've missed your entry point, the good entry point you could have entered. Fine, you don't have to jump on the trade, all right, because you've missed your entry point, now you have to look for another, or you wait for another entry, a good entry level. Because the interesting thing that you don't know and you are not being told is that you are not supposed, it is not compulsory that you are in every market. Okay, and I tell you, it is fine if you miss out on opportunities of jumping into the market, all right, but a missed opportunity today is not a missed opportunity tomorrow. The market is there, has been there, is still there, and will be there. So the market is never running away, and opportunities will always present itself. All right, opportunities will always present itself. You cannot force the market to move in your direction. All right, but you can always see opportunity when opportunity shows up at the right time you come into the market. All right, so don't beat yourself over it when you miss an opportunity or a good entry level. You can always wait for a good entry level to present itself. Okay, Daniel said, thank you for throwing more light, okay, on how to, yeah, you're welcome. I'm glad you're following. Yes, another question says, will it not be right to wait for a pullback before buying gold? Good, nice question. I love that question. So now, on the 1 hour time frame, I said that you set a buy order, right? And when I said you set a buy order, it is above the current market price. Okay, so fine, it is good to wait for a pullback. All right, you can either wait for a pullback and buy after the pullback, okay, or set a buy order to buy at the top. So for every trader, there are different views to everything. Okay, So now you have asked an intelligent question, all right, from another angle of saying, oh, what if I buy at the pullback? Fantastic. It shows that you are buying at a more discounted price than a trader buying at the, the top of the price with a buy order. All right. So now, how do you monitor when the market pulls back? Is the question. So you can also set a buy limit at your desired price point beneath this place. Okay, so you can do either of the two. Either you set a buy order to buy above the current price, or a buy limit to buy below the current price. Someone said demand and supply setup. Yes, that's a demand and supply setup. So you can see. Let me take it back to the weekly time frame. Okay, good. So this zone, let me write it here. All right, this zone is the supply zone. Okay, this zone is the supply zone. All right, why this zone is the demand zone. Okay, the demand zone, supply zone, demand zone. It is at the demand zone that price pushes up because people are demanding, traders, investors, institutions are demanding for the asset. It's at the supply zone that they are selling off, they are dumping the asset. All right, yeah. So in a ranging market, you apply the demand and supply strategy. Okay, yeah. So Berry One, thanks for mentioning. Okay. Someone said. Yeah. So like, if you want to calculate your stop loss, all right, knowing where to set your stop loss is a discretionary approach. All right. When I mean discretionary, it is unique to every individual, right, to determine how much he or she is willing to lose on that particular trade. Okay, that is it. Yeah, what the confluence supports the buying decision. Okay, good. So what other confluence supports the buying decision? All right. Now, for here, when price pulls back to this level, all right, because it seems like there's a breakout of this level. So when price pulls back to this level, that's like a pullback approach. Okay, is another confluence. So when price pull back and then another bullish move, another bullish candle, shows up. All right, that's a confluence. Okay, so aside from the demand and supply approach, okay, once this price breaks out of this line here, because this line here is also a resistance level, a minor resistance level. If it breaks out of this line here, that is another confluence to buy. All right. Okay. Someone said, I have been trading for about 5 months now and lost a lot of money trading right now. I cannot get stability in the market at all. What can you advise me, sir? Good. So I would advise that you understand your risk appetite. All right, and also there are things that makes you lose money in the market is when you take aggressive trading. You want to beat the market. You are trading with someone else's money, or you are trading with a money that you want to use to pay school fees, you want to use to meet an emergency need, or you are trading with a money you feel or you think you can double over time. By getting involved in that kind of situation, you always lose money. Why? Because your mental state is under pressure, all right, to make so much money with that account in a limited period of time. However, why don't you take it like this? If you have $1,000 account and you make $50 this week, appreciate that $50, all right. Why? Because it is a win, it is a good start. Then by next week you make 25 on it, that's 75. The next one you make 50, the next one you lose 30, you are still in profit. But the moment you want to make out of 1,000, you want to make 100 in a day, 300 in a day, you will always lose money. Another thing is, mind your lot size. Be cautious with your lot size. You can't be, there are some funds, the amount of your initial capital determines the amount of your lot size. All right, $1,000 to $100 account should stick with 0.01. All right, 0.01. 5k up, 5k to 10k, 5k to 20k can do 0.02, 0.03. Okay, then 100 upward can do 0.1, 0.7, 0.5, 0.1. Okay, 1 million can do one lot size. Okay, so you have to be very, very cautious of your trading, your trading capital, and also your lot size, and also your leverage. Okay, if you take so much leverage, you get burnt out easily. Okay, easily. Yeah, so someone said thank you for the lecture. So what is the best time to enter a trade? Now, there is no best time or a one size fits all time frame to enter the market. All right. However, there are times where there are high volatility in the market, and there are times where there are lower volatility in the market. Higher volatility in the market happens when the New York time, opens, okay, and also the London time. Right, those are the times where there are always, high volatility in the market. Okay, good. Someone is asking what is stop loss order and limit order. So it's stop loss order is that order that a trader gives to the broker, okay, to stop him or her out of the market, to stop the trade out of the market. That now this stop loss order prevents further loss, okay, when a trader it is in an already losing position. Why the limit order? Okay, it's an instruction that a trader gives to a broker to execute a trade at a particular given price determined by the trader. Okay, so in a limit with a limit order, you determine what price you want to enter, not that you enter at the immediate current market price. You are the one to determine what price you want to enter, either what price you want to buy or what price you want to sell. All right, good. Like I said, there is no best time to scalp. All right, you do what is convenient for you. All right, so if you want to scalp, like I said, the time where there is higher volatility, might be a fair time, okay, to get involved, to get into the market. All right, so that might just be a fair time. Okay, yeah. So thank you very much. So many questions coming in. Jimo said thanks a lot. So I want to know that if you got value from this session, let me know in the comment section. All right, if you want more of this analysis coming to you, more of this educative session coming to you from Octa FX, let me know in the comment section. And again, do not forget to tap the subscribe button, tap the notification bell to be the first person to be notified when we are having our next session. All right, every Thursday 6 p.m. same time, we are always here to give you the best and the best that you need. All right. I look forward to seeing you in our next session, and please come prepared